Hello, everyone. My name is Susan Ogunleye, and my financial analysis report will be on the company Lululemon Athletica. I chose this company because it's a really well-known athletic apparel brand, but it's also very interesting financially because it uses a different strategy compared to other companies like Nike and Under Armour. Into the little history of Lululemon, it was founded in 1998 in Vancouver, Canada, and the company started mainly with just yoga apparel, but it has grown into women's and men's accessories, footwear, and other athletic products and gear. Their mission is to elevate human potential by helping people feel their best. And I think this connects really well with their brand because they focus a lot on health, fitness, and wellness. Another important part of Lululemon is that they are a very premium brand. Their products are usually more expensive than a lot of other athletic companies, but customers like myself are still willing to pay those prices because of the brand and the quality of their products. So on to Lululemon's expenses. The two main expenses I'm focusing on are cost of goods sold and SG&A, which stands for selling, general, and administrative expenses. So cost of goods sold is basically what it costs the company to make and get the products ready to sell. So this includes things like material, manufacturing, and getting the products to the stores. And they have spent $4.82 billion on that. And SG&A includes things like employee pay, marketing, running stores, technology, and other costs of operating the company. And as you can see, they spent $4.07 billion on that. Um, and as you can see, both of these expenses are pretty large, but even with these costs, Lululemon still has a strong gross margin, which is about 56.6%. Basically, this means that for every dollar Lululemon makes in sales, it keeps about 57 cents after paying the direct cost of its products. And I think this one is one of the most interesting things about the company because financially it shows how important their premium pricing is, and they're able to charge more for their products, which helps them keep a much higher margin. So even though their expenses are high, their pricing strategy helps balance these costs. Now we're going to go on to where this money is coming from. So in total, Lululemon has made $11.1 billion in revenue as of 2025. And this company makes most of its money through its physical stores, e-commerce, and other channels. And what's interesting is that the e-commerce is almost as large as its store revenue. And with women's apparel is also still the company's biggest product category, which is what they started with in the beginning, and it makes up almost 2/3 of its product's revenue. This is both a strength and an opportunity for the company to grow. Women's apparel is clearly very successful for Lululemon, but it also means the company has room to grow in areas like men's clothing, footwear, and athletic accessories. And net income is also important. And Lululemon has made 1.58 billion dollars in net income as of 2025. And so overall, the company is still making a lot of money, but it's important to look at both revenue and profit when judging on how well the company is doing and how it's probably going to succeed over the next coming years. So for competitor comparison, I decided to do Nike and Under Armour because they are also another one of the top leading athletic apparel brands that I know of. And the first thing that stands out is revenue. And Nike makes around $46.3 billion in revenue, while Lululemon makes $11.1 billion, and Under Armour only makes $5.2 billion. So if we were just only looking at revenue, we can see that Nike was clearly the bigger company compared to Lululemon and obviously to Under Armour. The revenue does not tell us everything about how much the country is making in profit. So I decided to look at the gross margin, and that's where we really see the difference between companies, and that's where you see really Lululemon stand out. So Lululemon's gross margin is about 56.6% compared to 42% with Nike, and Under Armour it would be just below, at around 47%. Um, and the one reason for this difference is that Lululemon focuses on premium products, and people are willing to pay more for their products, which helps the company make more money from each sale. And Nike has a completely different advantage. It's much bigger and has a huge global presence, especially in footwear. So Nike's strength is its size, its reach, and its name. And Under Armour is smaller than both companies and competes more directly in performance apparel. So I wouldn't say Lululemon is doing better than Nike overall. Nike is still a much larger company. Instead, I would say that Lululemon has a different strategy that allows it to have strong profit margins, even though it is a smaller company. And this is one of the biggest things I learned from comparing the companies. Looking at revenue alone wouldn't really tell the whole story and how much these companies really are making and how they are making their own money. So for the future of Lululemon, I think it has potential to obviously grow in an upward trend, but obviously this is going to come with some risks. And one of the biggest opportunities will be international growth. Lululemon has been expanding outside of North America, especially in China, and this gives the company a chance to reach newer customers instead of relying mainly on customers within the North America area. Men's apparel is also another great opportunity. Women's clothing is still like the company's biggest category, as we know of. But growing the men's side will bring in a lot more revenue. Footwear is also another area where the company can grow because their competitors, such as Nike and Under Armour, were pretty successful in footwear. So them joining in the competition will definitely help them. And at the same time, there's going to be some risks. Competition is getting stronger in brands that are definitely more on the yoga side, such as like Alo, which is up and coming up, Viore, which is up and coming up. They're both, premium athletic brands such as Lululemon, and they're definitely becoming more popular. So I definitely see that as a one of their biggest competitors the years going forward. Um, and tariffs and higher costs could also hurt the company's profit margins. If prices continue to rise, customers may also be less willing to spend money on expensive athletic clothing. And for my projection, I would expect Lululemon to continue growing, but at a much lower rate than it did whenever the company is smaller. So as you can see, each year I see it going up about um, $2 million, I would say, each year is what I projected. And overall, I think the company is in a good position because it has a strong brand, loyal customers, and several areas where it can continue to grow. To wrap everything up, Lululemon is in a pretty strong financial position. The company has continued to increase its revenue, it has strong profit margins, and it has a brand that allows it to charge premium prices. And compared with its competitors, Nike is much larger, but Lulu has a higher gross margin. And this shows that being the biggest company doesn't always mean you're going to be the more efficient company. And looking forward, I think Lulu's biggest opportunities are international growth, men's apparel, and footwear. And its challenges will be competition, tariffs, and changes within consumer spending. And overall, I think this company has a very strong future, but how will it continue to grow will depend on how successfully it expands while keeping its premier brand and profit margins. Thank you.